Hey folks, welcome to the channel, Money Me. I do greatly appreciate you guys taking the time to stop by. We're going to talk about Disney. As you guys know, I made a video probably about 2 weeks ago talking about that we are buying Disney stock, and we are slowly building a position, a small position, but we will dollar cost average over the next year or two, hoping to turn this into an investment that honestly will get us a 50% return over a 2 to 4 year period. So Disney's stock is down after hours about 8%, 92.54, and their park revenue was up, but they are struggling. Their fourth quarter income was $162 million on sales of about $20 billion. $20 billion, and only look at, I mean, talk about low margins, only to net $162 million. But their revenues were short by $1 billion. I'm reading, and they're blaming it, and I talked about that in my other vehicle, that with fewer films out on the calendar and their media division, that's what's causing them to have not make the money that they thought they would be making. So yeah, profits are $3 billion. So a lot of this must be right at net fourth income. Okay, yeah, for the year, for the full fiscal year, Disney reported record sales of $83 billion, with about $3 billion, but nowhere close, it says, to the 2018-2019 level. Yeah, things have changed, obviously. And basically, the CEO is predicting that, of course, the economy with 2023, that it'll basically be single-digit growth. And I agree with that. I think with the recession coming, and only the people that can afford to go to Disney, you're just not going to have the revenue sources. And they're putting a lot of money in to compete with Netflix, so that is costing them. But they are at it. They did say they added 12.1 million new net subscribers, but they are spending a lot of money to compete with Disney. Their revenue, so where they were light in their revenue was media and entertainment. Yeah, that's where they were light. But Disney overtook Netflix as the streaming leader, it says. And their television networks, but their park revenue, wow, was up 50%, 7.4 billion from 5.4 billion. No, no. I just got back actually from Disney, and I can kind of relate because the cost is expensive. So this is a chart, and this is a chart, in case you guys are wondering where this chart is coming from. This is the Webull desktop app that you can use for free on your computer. And as you can see, in after hours, stock is down to 92.63. And the stock was just at $90 on July 15th. We bought some. Our average cost is only $95. And since I made that video, I haven't added none. We're talking about buying, honestly, about 5 to 10 shares a month. And if we get a market downturn, and we get, honestly, 80, 75, 80, we would obviously we would get more, because with throwing $500 a month at it, we're going to wind up getting more shares because the price is cheaper. So I'm okay with even if the stock does go down there. Looking back on the chart, I mean, it really broke down here. I mean, it got crazy. I mean, when everything shut down, it got down to 79, and then when everything opened back up, it ran. I mean, from 79 to 203. So let's see any news, what they're saying. Oh yeah, streaming loses peak. Parks still carrying the day. And the losses that they have on Disney Plus, they expect. I'm reading short notes on this. Wow. I didn't. The CFO of Disney said the hurricane, was that Hurricane Ian? Is that news popping up here? Listen to the news. Hold on. That's what's nice about this Weeble. You can pull things up. So let's see if we can pick that up. It says loading. Okay, so we're going to wait to load there a second. If you guys own Disney stock and want to comment below, please do so. Let me know what you think of Disney. Everybody knows who Disney is, but like I said before, I wouldn't be dumping any large amounts of money into any stock right now. And stocks are definitely risky right now because we are in a recession. It's not loading. I don't know why. Maybe just too much internet. So I don't want to wait 3 minutes while that loads. It could take 3 or 4 minutes, and then we'll have a lot of dead space here. But the analysis, I mean, they think the stock, which they're going to have to, the average thinks the stock is 141. The low is 105. The high is 230. I mean, come on. But for the most part, we have 30 analysts and with a 80% buy rating. No sell, no underperform, and just 20% hold. And I concur with that. I agree on that too. So I know a lot of people, and I was watching Twitter. A lot of people were buying options, thinking that this stock was gonna break out. But they have a big problem too because their labor costs are a lot higher now too. I don't know if everybody is union at Disney World, but they had a contract that something like $15 an hour. That a lot of jobs used to pay $10 an hour, and when you got that cheaper labor and it was coming all from, a lot of people would come from other countries and work at Disney just to get that on their resume and learn, and those people in those countries, $10 an hour was a lot because in their country the wages were much less sometimes. So, but historically, even when you go back, let's go back on a monthly chart. Yeah, it really broke out 2010. It was in a long range chart of only really, look at that, $40 there, and then really took off in 2011 and ran nice 3 times. Just in basically, you got 3 times your money, 2012 to 2015. Went sideways again for a period here of 3 years, and then obviously we had the shutdown and dropped crazy. Some people were saying Disney was going to go out of business. What's this now? CFO says CapEx will increase to a total of about $6.7 billion, and that's money that they're investing into stuff. Probably rides and different things in the park, but and then we had this crazy up here. So I honestly don't mind this price at 92 in here. I still think that takes us back really. I mean, you kind of go back. If you take out the pandemic low, we're basically going back to really a 5-6 year low, and the average. I mean, even back at 2016, you did hit what was that? A low. Oh yeah, 92. I thought I saw an 87. Maybe for a day trade. 86 back on 2016. So I mean, you go back 6 years. We were in that $90 to $100 range. So I think I like, and nobody likes to buy stocks that I mean, I knew it was crazy when it was up here at 200, but and that's what I'll say. I am not a licensed broker. I'm not a licensed analyst, but yet a lot of people are out there telling you to buy. This is the best. And sometimes I'm like, what are they saying? So I like the stock here, and we could get another repeat pattern here. What we have, a lot of sideways action up, sideways action up. Maybe honestly for the next 2-3 years, we get really some sideways action until the economy comes back, and so that's why I talked about we are basically dollar cost averaging. We are looking for the stock to be $150. We anytime it dips below that, we are just going to dollar cost average, and if it gets down to 75 area, and then we'll actually we might increase that month. Where if it gets back to 100, we'll back off a little bit, but we're trying to go honestly for around a $90 average with a target of 150 in the next 2 to 4 years. So, and that's a good return. You're not getting that in the bank. You're not even getting that typically in a mutual fund. I mean, if it takes 4 or 5 years for Disney to get to that, that's about 13% return you typically get in a mutual fund over a 10-year period. But all right, well, I just wanted to give you a little update on Disney, and I do appreciate everyone that's watched. If you haven't subscribed to the channel, if you could give me a thumbs up, click the bell button, and subscribe. It doesn't cost you nothing, but, I'm trying to make more daily content, and I'm working on something else, and I appreciate you guys take the time to watch these videos, and, comment below, and stay tuned. Thanks, guys.